Okay, so here we are. Good afternoon and warm welcome to everybody this afternoon, particularly our international attendees, our panelists and expert speakers to the first of our Inside Out webinar series. This is a new initiative of interactive webinars brought to you by Global Business Services, GBS, and its partner, the well-known English language news provider, Vietnam Insider. So particularly in these COVID challenge time, our goal is to bring actionable insights to our network of investors, business owners and expatriates who are considering or already invested in Vietnam. So this is the purpose of our webinars. The agenda for today is quite tight, so and it includes these four terrific panelists that you probably see on the screen. Time permitting, we'll also have question and answers. So please use your Zoom to log any questions that you have, and we'll attempt to get those if we have sufficient time. So just running through the agenda quickly. I'm Ran Wood. I'm the host of today's session, and our first speaker going to talk about conditions in the real economy is Richard Burrage. Our second speaker is Oliver Schwartzhaupt, Chief Risk Officer of Maritime Bank, who's going to talk about credit conditions. And our third speaker, Dimitro Kolechko, is also the Chief Risk Officer of a different bank, a VP Bank, and he will also be discussing some insights about credit conditions and collections. And then finally, our most attractive speaker is Ms. Chan Min Tu, or Kathleen to her friends from outside, and she's a principal lawyer at Vic Law and a partner of GBS. So that's our agenda for today. Let me just remind everybody a little bit about our speakers one by one. And our first speaker, as I mentioned, is Richard Burrage. He's the Managing Director of Cimigo, an independent Asian market research and consulting firm. He's a long career, 25 years plus, researching, teaching and testing consumer behaviours, and he's counseled clients on consumer behaviours, responses and bounce back through significant shocks in different Asian markets, including through the Asian financial crisis, SARS, and the GFC and the swine flu, and now COVID. Fantastic. So Richard's the perfect speaker to tell us what's really going on with a focus on Vietnam, and well positioned to teach us about what's behind the figures in these turbulent times. So, so enough from me for now, and as we go into the other things, I'll introduce the other speakers. So thank you, Richard, and good luck. Over to you.
Thanks for having me, Ram. I'm just going to share my screen and get going. So I'm just going to give you all a short introduction to the economy. I just wanted to start with where we've come from, look where we are, and then sort of sum up with where we're going. So this is what 2019 looked like from a sort of, you know, what is the consumer market and what is the larger, broader economy looking like in Vietnam. So, you know, 2019 saw very high growth, 7%. It's been around 7% for the last decade, a GDP per capita of about $3,000 US, and lots of other numbers there that I'm not going to read out in the interest of time. But you can give you a picture of a burgeoning, booming consumer economy and middle class that's growing, very digitally savvy, sort of mid-aged, average age about 33 economy. So, you know, an interesting market, which ahead of it, as we went into 2020, had a decade forward view that was extremely positive, and positive because of workforce participation, the number of women working, the digitalization of the economy and consumer savviness. All the metrics from demographic, economic, international trade were really looking phenomenal. And it was really going to be a golden decade going forward. And so, of course, then we have a little accident. And that said, we're privileged to live in a socialist republic where the government is able to move in and control things very well. And that they did. So, you know, the total infections recorded to date are just over 1,000. This is as of yesterday. 92% of them are recovered. Unfortunately, 35 people have passed away, and there's still 52 people being treated. But of course, you know, I'm from England, and this is less than my home country sees on a daily basis. So a phenomenal good job in protecting the economy through very quick action, very quick tracing, and very quick to lock down and close down schools, close borders, and so on. That said, certainly economies are often driven by emotion and uncertainty in consumer confidence. So there was a big impact, obviously, during lockdown, and I'll show you that briefly. And then there was a small, by global comparison, resurgence on my birthday, which is also War on Invalids Day in Vietnam of July 27th in Da Nang. So a lot of people in a recovery just started to travel domestically, and there was a small resurgence. So there was another scare there, uncertainty prevailed, and the economy took a little mini shock at that point. What we saw from coming out of lockdown until end of July was a marathon of recovery. It was a slow build. Each month was getting better upon the last month. And then what we saw in August, post this little issue in Da Nang, was a very sharp trough, but a very sharp, speedy recovery back to where we had been in July, in September. So, you know, we're probably entering a stage where we're going to see more peaks and troughs. But if anything to be learned from the most recent case was the economy didn't slowly build back up to where it was over a period of months. After the last scare in Da Nang at the end of July, 3 weeks later, it was really back at where it had been pre that scare. So it was a very quick, speedy recovery. So the bounce back was really quite phenomenal. So let's just explore a little bit of that. So you can see what happened during lockdown. This is the stock market view, just of course very sentiment driven, but this is the reaction to uncertainty in the markets, the recovery of that stock market, and then you can see at the end of July, in August, again, uncertainty prevailed with that little shock. We can see that in other areas also. This is the Purchasing Managers Index, which Cimigo runs here in Vietnam and has done for a very long time. As you can see, briefly, anything above 50 would suggest growth in manufacturing. Manufacturing contributes about 24% of Vietnam's economy. And you can see during lockdown what happened to manufacturing. You can see in August what happened here after that dip in July. And the latest data just out today shows us back in a growth and expansion mode for manufacturing. So new orders and output from production is back on the increase. Unfortunately, labor is one area that is not back on the increase and continues to decline, although it's the softest decline we've seen since COVID-19 struck. And that's a point I want to refer to, because when you look at the jobs that are added to the economy, it's quite interesting to see really what has been the impact on jobs. So in 2019, 450,000, I'm rounding, but 450,000 jobs were added to the economy. In Q1 of 2020, still 300,000 jobs were added. And then in Q2, 2,180,000 jobs were lost. And that's lost jobs. That it hides or masks the fact that a lot of people would have been curtailed their income. The economy is largely driven by small and medium-sized enterprises. So a lot of those businesses would have had their incomes curtailed, and therefore the people running them. But also people in white-collar and blue-collar labor environments would have had corporate reactions which would have reduced their income somewhat temporarily. And there's a picture of some nice rice paddies there, and that's really to demonstrate the sponge that the agricultural economy in Vietnam acts for the total economy. So when a lot of particularly blue-collar labor can't find work, it tends to retreat back to its hometown. There's a lot of migrant labor, and that hometown tends to be rural or small urban areas that can absorb an awful amount of shock, in that people still have a roof over their heads, they still have a family home, typically near farming or fishing, they can still eat, but of course they are grossly underemployed, and therefore the economy loses productivity. but it is a unique position for a lot of Southeast Asian markets where you have a rural economy that can really absorb economic shocks incredibly well, and Vietnam is very fortunate to be one of those. Just demonstrating here over time some key metrics that some of you might be interested in seeing, looking at Q4 of 19 as a point of comparison, Q1, Q2, and Q3. So all the data is up to date for Q3, and then the final column there is just comparing data year-to-date September 19 to year-to-date September 20. And we can see that just running through that in Q2, GDP growth dropped. Didn't go negative, but dropped obviously significantly. In Q4, we were looking at close to 7%. In Q2, we were looking close to 0. Industrial production fell to a negative point. Retail sales fell to a negative point, or its growth, sorry, fell to a negative point. Amazingly, exports have continued pretty well. Imports at less speed, so giving a trade surplus of about 17 million as of year to date. Price consumer index, real inflation remains below 3%, which is great. A little bit of a drop, still staggering amounts of, this is dispersed direct investment as opposed to promised. So still a staggering amount of foreign direct investment coming into the economy. And probably the saddest one there for a lot of homes is the jobs actually subtracted, not added. So if I just look at that from a summarizing the year-to-date performance, then, those are numbers, metrics that most countries, any country would be extraordinarily happy to be looking at relative to the rest of the world. And also, when COVID struck, we produced quite a number of webinars and documents looking at strategies for bounce back and how to manage through the crisis. And back then we were forecasting the same GDP, and that forecast remains true today based on these numbers. In fact, the trajectory that we envisioned for consumer spend and consumer growth, because that's really our focus, has been almost right on track. So, and we've taken into account obviously the falling income and the lost income of those people who've lost their job. And then for those of you that are looking inwardly from overseas into Vietnam, this was a nice piece courtesy of the World Bank in their most latest report on the economic impacts and reactions and forecasts. So this is forecast GDP for different countries in our region. And you can see that Vietnam is topping the table at just under 3%, followed by China around 2%. Myanmar also expecting some growth. They have quite a slightly different budget year, but anyway. And then every other market looking at a contraction. So Vietnam remains, and that probably explains the foreign direct investment levels, remains a very attractive market for inbound investment. And its long-term prospects and its bounce back are really quite phenomenal, and one has to bow down to the government that's led the country through this crisis. I don't know how long I've been speaking to, but I was on a limit. That's really all I wanted to say. And if you have any questions, you can reach me at ask@cimigo.com. If you want the slides, drop me a note. I'll send them to you, no problem. So back over to you, Ron. I'm going to stop sharing now.
Okay, great. Well done, Richard, and thank you. That's, again, very interesting as always. I guess just one question before we move on. What are some of the things that you believe the figures don't surface particularly well? Because, yeah, Vietnam has obviously done well not to be ravaged by the virus, but it also appears that, some sectors, for example, tourism and so forth, seem to be still, in a kind of coma because of the lack of the tourists, and obviously whatever other restrictions because of the travel ban. So, 2%'s not a bad average in global standards, but what are some of the areas that you think are going to be take a bit longer, perhaps, than others?
Yeah, I mean, first thing I'd say, not a bad average. It's a phenomenal average in the global circumstances. And the fact that exports are maintaining the levels they are, given the international demand, one would have thought would have had a huge impact. So what don't the numbers tell us? The numbers don't tell us the number of the increased interest that particularly manufacturing is getting. partly as a reaction to politics and geopolitics with China, but also, let's be honest, manufacturers are looking for margin, so it's also down to the cost of labor. The other area that it's really hard to get a handle of is the underemployment and the long-term impact of that lack of productivity. The hardest area that has been hit, of course, has been tourism, and Cimigo has produced a study on the tourism industry just recently, looking at consumer responses to tourism. It was rebounding from a domestic point of view beautifully until that crisis hit at the end of July. And so the tourism industry domestically sort of had a 2-week window from school holidays, which were delayed before that crisis hit, and then cancellations were the norm. And of course, international borders have been closed, and frankly, I hope they stay closed. Easy for me to say, I'm not in the tourism industry, but that sector has been very, very harshly hit, obviously.
And if I guess the COVID conditions continue into next year, I mean, nobody really knows with what's going on in some of the developed countries, and obviously some of the developing countries like India and Africa and South America are also facing I guess no deceleration in the conditions. Do you think it's really just those sectors that are going to be impacted that are currently really feeling it, or it could?
It's an interesting debate. Some pundits would be suggesting that, there's a backlog, and that's why manufacturing in Vietnam, for example, is maintaining quite strong outputs. And is the longer term demand going to drop? In certain elements of manufacturing, so textiles, for example, has probably lost somewhere between 20 and 30% of its orders coming from overseas. So, but at the same time, you can look at some of the manufacturing for electronics, which is growing phenomenally. Admittedly, there's not too much value add beyond assembly here in Vietnam, but it's certainly helping with the employment levels in manufacturing. So honestly, it's an unknown, but just the latest numbers from the Purchasing Managers Index suggest that, again, we've seen a couple of dips between the reopening after lockdown. We've seen a couple of dip months, but again, factories are seeing strong orders coming in at the moment.
Okay,
what's going to happen 6 months from now? I don't know. Sorry.
Wow, somebody got to supply the world with manufactured products, and people still need clothes and shoes. So let's hope. Let's hope. Thank you, Richard. Excellent. Well done.